10. Alternative ways to purchase a home without a mortgage. Buying a home without a mortgage may seem like a challenging goal, but it's entirely possible with the right strategies. Traditional home loans come with interest payments, long-term debt, and financial risks, making many buyers seek alternative paths to homeownership. Fortunately, there are multiple ways to achieve this, including seller financing, lease-to-own agreements, partnerships, and leveraging personal savings. By exploring creative financing methods, you can bypass banks, avoid high interest rates, and gain full ownership sooner. Whether you're looking for flexibility, lower costs, or debt-free living, these strategies can help you secure a home on your own terms. 1. Seller financing. Seller financing allows buyers to purchase a home directly from the seller without a traditional mortgage. Instead of borrowing from a bank, the buyer makes payments directly to the seller under agreed-upon terms. This method often requires a down payment and negotiated interest rates, but offers more flexibility. It's beneficial for buyers with poor credit or those who prefer to avoid banks. Ensuring a proper legal contract is essential to protect both parties. 2. Lease-to-own agreement. A lease-to-own agreement allows buyers to rent a home with the option to purchase it later. Part of the monthly rent goes toward the home's future purchase price. This option benefits those who need time to build credit or save for a down payment. It also allows buyers to live in the home before committing fully. However, it's important to carefully review contract terms to ensure fairness and avoid potential risks. 3. Assuming an existing mortgage. Assuming a mortgage means taking over the seller's existing home loan under the same terms. This option is only available for assumable loans, such as some FHA and VA loans. It can provide lower interest rates and fewer upfront costs compared to new mortgages. However, the buyer typically needs lender approval and may have to cover any difference between the loan balance and the home's sale price. 4. Renting with an option to buy. Similar to lease-to-own, renting with an option to buy allows a tenant to lock in a future purchase price while renting. This strategy is useful for buyers who need time to secure financing or improve their financial standing. A portion of the rent may go toward the home's price. However, buyers should negotiate fair terms and be aware that if they choose not to buy, they might lose any extra payments made. 5. Using a private loan. Instead of getting a mortgage from a bank, buyers can seek private loans from individuals or groups, such as family members, friends, or private investors. Private loans often come with more flexible terms, lower fees, and faster approval processes. However, they should be backed by a legal agreement to ensure clarity on repayment terms. While this option can be a great alternative, it's important to maintain transparency to prevent financial disputes. 6. Crowdfunding or group buying. Crowdfunding homeownership involves pooling money from multiple sources, such as family, friends, or online platforms, to purchase a home. Group buying, where multiple buyers co-own a property, is another way to afford a home without a mortgage. This approach helps share costs and responsibilities, making homeownership more accessible. However, clear agreements on ownership, usage, and exit strategies are crucial to avoid conflicts among contributors or co-owners. 7. Buying a foreclosure or auction property. Purchasing a foreclosure or auction property can allow buyers to acquire a home at a lower price, sometimes without needing a mortgage. These homes are often sold below market value, requiring full cash payments or alternative financing. While this method can save money, it's important to research the property thoroughly, understand potential legal complications, and budget for necessary repairs or renovations before committing to a purchase. 8. Bartering or trading assets. Some home buyers acquire property by trading assets instead of using cash or a mortgage. This could include trading land, vehicles, services, or other valuable assets in exchange for a home. This method requires finding a willing seller open to bartering. While not common, bartering can be an effective strategy for those with valuable assets and negotiation skills. A legally binding agreement is necessary to ensure both parties receive fair value in the exchange. 9. Saving and buying with cash. Purchasing a home with cash eliminates the need for a mortgage entirely. This method requires disciplined saving, reducing expenses and possibly investing in high-return opportunities. While it takes time, buying with cash removes the burden of interest payments and long-term debt. Cash buyers often have more negotiating power and can close deals faster. However, it's essential to maintain an emergency fund to avoid financial strain after making a large upfront purchase. 10. Owner-carry second mortgage. In an owner-carry second mortgage, the seller finances part of the purchase price while the buyer secures a smaller primary loan or pays a large down payment. The buyer makes payments directly to the seller for the remaining balance. This approach provides flexibility, helps buyers who can't get full financing from a bank, and benefits sellers looking for consistent income. Legal agreements and clear terms are necessary to protect both parties in the transaction. Thanks for watching the video. Please subscribe.